Good morning, traders. It is 8:03 a.m. Chicago time on Thursday, the 28th of July, 2022. Thanks for joining me this morning. Sorry about the late start. A lot going on this end. This is episode number 2282. This is the day after the FOMC decision, and I guess we're not going to hear from the FOMC until September. Here we are. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. My voice should be coming through nice and clear. Let me know if there are sound anomalies. Should be smooth, like butter. Let's take a look at our pre-market summary sheet from Convergent Trading here. We have a mixed market, basically unchanged on the day across the S&P, the Dow. The Nasdaq's taking a little bit of a hit. If we look at the heat map pre-market, we can see why. This is being dragged down by Meta. I hardly know her. You could see that Meta's dragging us down a little bit, but overall the Nasdaq is showing some weakness, a little bit of weakness, but we're not really going anywhere, is what it is. The overall posture, even in the S&P, as it says in the middle of the page, is balance. That's where we are. So mixed markets this morning. We had key earnings, Total Energies, Valero, Stellantis, Comcast, Pfizer, Merck, big ones, Thermo, also a big one. I'm not going to go through those earnings. All of you can look those up. After the close, continued majors. This is really the height of earnings right now. It is the kind of heavy hitting part of the earnings season. We've got Amazon, Apple, double Apple, Intel, US Steel. What has pushed us around overnight? Of course, the market's still kind of responding. The message from the Fed is reverberating across the globe, the Asian markets to Europeans, and now back to the U.S. German inflation came in higher. Germany had year-on-year prelim for July at 7.5% versus 7.2. Now, that's lower than the 7.6 that was the prior, but still quite high. Month-on-month, it went month-on-month for July prelim was 0.9 versus 0.5, so still inflationary pressures there. Then GDP came out at 8:30 Eastern. GDP showed a U.S. GDP Q-on-Q advanced for Q2 came in at negative 0.9%, negative 0.9% versus the expected positive 0.6. So definitely a big miss there. And I don't know, I heard a blurb from our news feed, one of our news feeds, something about two numbers in a row that are negative, therefore officially recession or something. I don't believe in any of that stuff, by the way, just because something, I don't know, people try to put a box around recession. I don't think it's that simple. Initial claims came in at 256,000, expected 255, which is better than the prior 261. And what's left today? Oh, the price index component of GDP came in hot Q on Q, 8.9% versus 7.5, higher than the prior of 8.3. That's not good. And then this evening at 7:30 Eastern, we have unemployment rate out of Japan, and we have industrial production out of Japan at 750, retail sales, the Bank of Japan summary of opinions, and that pretty much wraps it up. PPI out of Australia. Looking at the S&P, the S&P is trading a little bit heavier than it has been for the last few sessions. 226,000 contracts traded. 84% of the volume is short today, meaning 84% of the volume at price is below the closing price. The range is pretty tight at 26.5. The mode for range in the overnight session, the mode, for those of you who skipped statistics in school or never took it or slept through it, the mode is the most common value, also known as the point of control. The mode is 25. 25.00 is the mode is in terms of range in points for the S&P 500 overnight, and the range so far is 26.5. Not impressive. Not impressive at all. And that's what we have for the S&P. Notice the point of control today is 40.15, and if you recall, 40.16 is that big gap zone high, which turned out to be last week's high, and we are basically building volume right in the middle of the gap is what this is saying. Capiche? Okay, so that's that. Let's take a look at yesterday. Yesterday, the primary expectation is that given how we have rejected and moved away from the magnet at 09, the expectation is we are likely to continue to push higher. We opened above the prior day's high, ending the one-time framing down that was established on Tuesday. So we established one-time framing on Tuesday, and then we opened above it on Wednesday. This is quite bullish, So I expected a test of 39.97 and a retest of 40.12 as indicated in this video from yesterday morning. So that's what we've got. I did put some scenarios up here. How dare you call me? I did put up some scenarios here. Here's the FOMC looking for it to pull back a little bit. Yesterday I was looking for it to pull back to 50. Being, oh, no, don't want you to play, don't want you to talk. Pull back to the 50, and if it does not hold the 50, 50 being basically the high of the prior session, if it doesn't hold the 50, then it can go as far as 36.40, but I do expect it to bounce into the FOMC and, of course, 97 and, again, 40.16 test. And if you recall yesterday, I said that if we take out, did I say this in the Trader Bite or did I say it in the Convergent Trading Head Trader, the Maven's channel? I don't recall what I'm saying where. I'm getting old. But I had said that if we take out the 40.16 quarter, we are very likely, because of very poor structure above there, we're very, very likely to push through to 40.71.73 and 40.90. Let's take a look at where that comes from. Here we go. This is where this comes from. So this is what it looks like. This is the 40.16 right here. This is the low of 40.16. There's the gap we left behind. We also had a gap here that we filled in quite nicely right in here. Okay. And then we tested that gap high last week. And then came off. That was Friday, came off. Here's Monday, here's Tuesday, here's yesterday. Okay, and what I said is that if it pushes through that 40.16, there's very poor structure all the way up to 40.90. So first we have the bottom of this box here, the balance at 71. 71 is 73. Okay, that becomes highly probable. Look at the structure. Look at how it bounced and exploded downwards. Very poor structure in this stem here. We would go right up the flagpole with this, most likely. And then we have these massive single print zones all the way up to about 40.90, something like that. I don't remember the exact price. It's been a while. And yesterday, the way we put in this top, we pushed the top by 3 ticks before falling back through and filling the single prints down below. So to me, this looks mega bullish. And we are about to get into the single prints from that area from before. We do have the century figure at 40.50. The high yesterday was 40.4275. We do have the 50 that's likely to hold us up a little bit. But from there, really, I'm looking for the 71, 72, and the 90. That's what it's showing. Now, if we zoom into yesterday's profile, we do the zoom, you'll see that yesterday's profile also left some poor structure underneath it, down into 39.90. The exact price for this is actually 39.8950, I think. Something like that. That's where the single print is. So we had the single print here, and then we tested, filled it, and then we created more single prints. Any test down would be looking to target and fill that 39.8950. If the 39.8950 does not hold, where would it likely go? Where would you expect it to go if it doesn't hold at 39.8950? Let's see how well you understand the auction and how well you can create a map on the fly and understand the price map for the S&P. So if it doesn't hold the single print, are you ready? The prior point of control, right? So if it does not hold the single print, value has no value in a trend type day, and a non-Gaussian or non-balanced profile value. There is no such thing as value. And if that's the case, then you're looking at 39.75 test. Okay. If the 39.75 doesn't hold, voila, 39.55 becomes the next test. So we had 55 the prior day. We put in 54.50 the next day. Very clear support resistance here. Very clear play from here yesterday. I think I got long to 76. I don't know, somebody from Convergent here might remind me. I think I got long to 76 or something off of the FOMC, 76, 75, and 76. And I puked them out real quick. Very poor trade management there. But if we take out the singles at 89.50, we are back to where the Fed announced. We are back to the point of control. And if we don't hold that point of control, not interested in value low, interested in the 55. And now this will tell us that we poked right into the sell-off structure from June and then came right off. And what's the expectation if we do that? If we put a base in, go in, poke a key structure and come back, what would we expect? What would we expect going forward? I don't have much time for the answers. We would expect the market to go into balance. What we have then is a test of the low, and it found buyers, and we have very clear test structures above, the 40.16 quarter, 40.50, 40.71, and so forth. And if it rejects those and comes right back to the middle, we are likely to be stuck in balance. And so you need to shift your mindset and start creating a tighter price map to trade from the outside in, outside in, outside in, until such time as it sucks in enough buyers and sellers. For every buyer, there's a seller, always and forever. And by the way, there's an infinite number of futures contracts, unlike a stock. So they're always balanced. It sucks in enough buyers and sellers so that the next time it reprices, the move will be out of balance or trending. That's really, we're talking about a swing basis. We're looking over the next month or so. If that's the case, if we're able to hold these prices, we're currently trading at 40.25. If we hold these prices and we stay above that 40.16, this line here, if we hold today above the 40.16 and we stage an attack against 40.42 from yesterday, 40.70 becomes the target. If we launch through Really, you want it, I'm going to look to hold that trade into 40.50 for scale, and then I'm going to look to hold it into 40.71, and that brings us into June's balance. That whole area that I showed you earlier. Let's zoom out. Then we get into this thingamajig right here, right? So that's the play. That's really how things are laid out. So try not to get into your trigger chart. This is my trigger chart, my heat map. Try not to trade from here. Don't trade from here. And if you're not consistent, please don't fall for the nonsense online about trading with just order flow, trading off of gut or feel. None of that stuff works long term. I can say that because that's my origin. That's where I came from. Heavy volume, high volume scalping. That's how I used to trade. You need to trade from your intraday chart. You need to look at the market in the big picture, know where you are on the map, right? Constantly know where you are on the map. Here's the 55. Here's your 75 or so. Know that there's very little structure down here. Look at how beautiful this structure is. It's just, it breaks through into an impulse, comes right back into the top of the 4,000, and it starts holding in the overnight session with a weakish low. But yesterday it pokes into the 39.90, fails, consolidates, pokes out, and comes right back to that 39.90. And and also we saw the same thing at the 39.74 yesterday. Just really nice structures, in my opinion. Doesn't make it easy. Doesn't make it so that you can't lose. I'm not saying it's not. You should be making money or anything like that. It's hard. It's easy to see what happens after the fact. But overall, the market really, when you're trading the market, you really should be looking at the overall structure and not get so tied up with what's going on with your 1 minute bar, 3 minute bar, or whatever. Move to your 1 minute bar or heat map or order flow when you're engaging, but your plan and your price map needs to be off of a bigger picture chart. What you're seeing in front of you here is an all sessions with separate profiles on a 1 tick by 20. I don't need a chart. I don't like using time, but if you like to use time, then look for a 30-minute bar chart or 60-minute bar chart to kind of keep an eye on the bigger picture. So we're opening in range this morning. Let's wrap it up. We're opening in range this morning. Note the resistance band right there, this little kind of maroon band. Let's go to the levels. See that maroon band up there? That's that's demarcating that 40, 71, 73 zone. This morning, what am I looking for? Primary scenario, we're opening on top of VWAP, on top of mid, on top of the overnight point of control, expecting a bouncy, choppy open, whipsaws in both directions most likely. I'm looking for it to retest this low in the overnight session as it shows weakness. If it doesn't, we do also have a weakness at the high, but I'm looking for this thing to pull back into down into the 4,000s, and then I'm looking for it to push through and take out yesterday's impulse day. Yesterday was an official impulse day. That high is going to be vulnerable. That 42.75 is likely, has a high probability of being broken today. So I'm going to look for the long, and then I'm looking to take that to at least 40.50, if not the 40.71 area, before we run into some really heavy resistance up there, potential heavy resistance up there. Okay. So that's the primary scenario. So whatever pullback, I don't know how much it'll pull back. Man, I hate having to select the color this way. They took away my ability to just select the color. Um, Secondary is we immediately push higher. We have an open auction. We push higher, take out the overnight high, make an attempt at the 42.75, poke through, find an impulse down, find resistance, pull back to what could be the IB or whatever, fall back in. And what we're likely to do here is just rest between yesterday's high and the 4,000 as part of scenario 2. We are opening in range. We are opening on top of the overnight levels, and the market is basically in balance here. We're opening on top of settlement. There's a lot going on here, but that high is vulnerable. The overnight session did not even give up yesterday's mid, so I'm looking for that to be the key test, 42.75 this morning. So that's the big picture. Good luck today. Make sure you follow your plan. Make sure you're patient. It's really useful now to just stand by for the first 15, 20 minutes. Don't try to preempt the market. Just let it set up. Give yourself time. The day is long, and you'll find opportunities, hopefully, throughout the day. Don't blow your wad early on, in other words, in crude terms. Good luck. And don't forget to hit the subscribe and like buttons. It helps the channel get promoted. More people find the content. Take care.